Peace, panic, and pills move markets. We have a ton of stuff to break down in regards to what is driving the market right now. Where are the opportunities? Where are the trades for the rest of the week? I mean, we're only Tuesday, but there's still plenty of opportunities, especially if you're going to be taking a prop firm challenge, and we're going to talk about prop firm challenges in this video. So first things first, what happened yesterday? It was a flat day overall. The market is waiting for the next big catalyst, which we're going to get any day now, any moment now. Today or yesterday, when you're watching this, there was a chance that the end of the Ukraine war was going to be that catalyst, but we have not yet seen that, at least not officially yet. So S&P 500 literally flat, down 0.01%. The NASDAQ flat as well. 0.03%. Dow Jones flat as well. The only interesting movement we had yesterday was Bitcoin. And again, we are going to talk about that. To give you an idea of what's on the menu, we've got peace, panic, and pills move markets. S&P is up 10% year to date, but the dollar is crashing. The dollar has been absolutely getting destroyed this year, which has huge implications for both traders and investors. You should be both. So we'll look at that. Is the government buying Intel? Interesting one there. Ethereum about to crash, and is this stock way undervalued? So first things first, the main catalyst that the market was looking at yesterday was Zelensky being in the Oval Office. Now, was there going to be a huge blowout like last time? That was entertaining. Unfortunately, that did not happen, but Zelensky did meet in the Oval Office to try and come to some sort of agreement on ending the war. So remember, Trump met with Putin last Friday in Alaska. Now he's meeting with Zelensky. So what actually happened? Well, it was pretty much a nothing burger. Nothing really happened. So Trump said that they took a significant step after Putin did agree to consider security guarantees for Ukraine. Zelensky nodded along but added, "Let's talk details." So again, no major breaking news, no headline moving event. So why do the market cares? A real ceasefire would untangle supply chains, ease commodity shocks, and remove a giant geopolitical cloud that's hung over equity since 2022. It's kind of crazy to think that we're now in the third year of the war. So remember, why does this matter? You're a trader. I'm a trader. We're taking prop firm challenges. We're trying to ultimately make money. So why the heck does this matter? I don't have a dog in this fight, but the reason that it matters is because it's going to drive market sentiment. So if the war ends, if there's a big headline saying, a permanent ceasefire agreed to, peace agreement signed by all parties, that is a huge risk on catalyst. The market is going to rip because it's taking potential escalation fears off the table. Okay, but insiders warn that peace talks take forever. They do. Translation: don't pump champagne on your wheat futures just yet. So what do we think? Traders, you need to stay nimble. You can't just, get stuck in one position. You need to watch the headlines closely. Remember, this one is very straightforward. Full agreement, full end of the war, risk on. Any sort of further delays is risk off. Not saying the market's going to shift to complete risk off sentiment, but that is what you need to be paying attention to. So basically, trade optimism and rent pessimism. Number two, Bitcoin's mood swings. This is an interesting one. Let's take a look at the Bitcoin chart. Last week, we had a beautiful week, all-time highs all the way up to just shy of $125,000. 124,533 is what I see on this chart. But we have now dropped. The low of today was an almost 8% drop from the all-time highs. We're now sitting at just over 6% down from the all-time high. So is it crashing? Absolutely not. Bitcoin's obviously volatile, but from a technical analysis perspective, what's this guy right here? This is the daily, I want to double check for you. This is the daily 50 EMA. It's incredibly strong, and it's going to be very bearish if we do break it, but we have not broken it. You can see here that's going back to early August. Strong bounce, strong bounce, strong bounce today. Let's go on a higher time frame chart, the daily. You can see the print that we're getting on the daily chart is looking really bullish. A clear rejection of this daily 50 EMA. We had it here back in August. Again, we almost touched it here in July. We sort of had a fake out here in June. Again, scrolling down. The last time we broke it clearly was all the way back in February, and then it dropped another, decent percent from 99 all the way down to 75. So this is the level to be watching on Bitcoin. It's very clear. It's very strong. We've got support at the number $115,000. but then also that moving average. So ultimately, that's what you need to be paying attention to. Very straightforward. In terms of anything else that's going on with Bitcoin, I mean, it's had 4 all-time highs this year. So it dropped down to 116K. It forced $500 million in liquidation. So you have to really pay attention to that because people are so leveraged in the crypto market right now that any sort of decline, whether it's 2%, 3%, I think it was down 2% today at its peak, hundreds of millions of dollars of liquidation. And that's going to play a huge factor on risk sentiment. And you can see here on Ethereum is like Bitcoin even more leveraged. I think over the last month, it's up, I think 30% or something insane, but it dropped 3% today to $4,300, but it's still up 25% in the last month, 30% year to date. So again, this is regular, crypto fluctuations, nothing too crazy, but obviously it's playing a factor on risk sentiment. There's going to be profit taking. I mean, I'll say it in every single video. Long-term Bitcoin's going up, but it's also very dependent on what the dollar does, and we're going to talk about that shortly. So that's probably the most important takeaway of today's video. Lastly, this one was really interesting. Novo Nordisk. So I had not really heard of the company before. Probably a good chance you haven't heard about them. They make Ozempic, which of course you have heard of. They popped 6% yesterday. They're up almost 8% in the last 5 days. This was kind of headline breaking news because the FDA just approved a new weight loss drug called Wegovy. I don't know who makes the titles for these drugs. They need to find a new guy. It treats a nasty liver disease. So that moved the market because obviously it's a new drug. They're going to be able to sell it. But they also slashed the Ozempic's out-of-pocket cost for U.S. patients. So they cut it in half from $1,000 to $500 a month. That's if you're uninsured. If you're insured, still about $50 for the two of them. So the stock absolutely ripped. No dividend yield, market cap just over $1 trillion. So this is a massive company, absolutely huge. I don't know what I've been doing, not hearing about them before, but they're the producers of Ozempic. So they are, responsible for the culture war that's taking place right now. So what does this mean? Obvious, more patients, more prescriptions, more revenue. So definitely an interesting stock to keep an eye on. Not as interesting as the stock we're going to talk about down below. Okay, now if you are new here, I quit my job in 2020 to trade full-time with prop firms. I then started my own prop firm, Lark Funding. I've been running it for over 3 years. We have the easiest, most flexible rules in the entire industry. So if you're ready to take a prop firm challenge, if you're looking for a prop firm that is sustainable, that has been around for a long time, that doesn't get into dumb social media, Twitter fights with other prop firms, Lark Funding, code August10 will get you 10% off any account. That's the only thing I have to sell you. Let's get back into the value. So this is going to be the biggest takeaway of this video. You need to understand what is going on here. The S&P 500 year to date is up 10%, but the dollar is down 10%. Let's take a look at the DXY. I don't care what you trade, you have to be following the dollar index because it moves everything. I don't think you can be a successful trader trading anything, whether it's Euro US, Pound US, US CAD, doesn't matter, Bitcoin, gold, doesn't matter, have to be following the dollar index. If you don't understand what's driving the dollar, I honestly don't know how you're going to be able to trade. So you can see here on the daily time frame, as of, early-ish year, January, it has been in a huge decline, just massive. So 10% drop here. If we're going an even higher time frame of the weekly, you'll be able to see kind of a bigger picture of what's going on. So this purple moving average is the 800 moving average. It's insanely strong. We're not quite there yet. We did get a slight bounce just above it. Something to keep in mind, but the dollar has not been doing well. Why is that? Why is the dollar not doing well? Several factors that we need to take into consideration. One, the tariff war, the trade war, that had a negative, very strong negative impact on the sentiment of the dollar. Number two, the stock market has been ripping higher. So what happened? March 2020 as the best example. The market sold off. What do you sell stocks for? You sell it for the dollar. So there's more demand for the dollar, and as a result, the dollar went up in value. You could see that spike right here on the weekly chart. This huge spike right here. Everyone thought the world was ending. Then everyone realized the world was not ending. Stock market hit an all-time high, and as a result, the dollar dropped. So the dollar is dropping because the stock market is absolutely ripping. You can see here, all-time highs. Nobody wants to hold dollars. Everybody wants to be in equities. That's number two. Number three, perhaps most important, is the Federal Reserve, right? We have interest rate cuts coming. The market has been waiting for them. Trump has been just ruthlessly demanding that Powell cuts rates. Remember, lower interest rates mean weaker currencies. If we pull up the poly market odds, because this is always something that's good to pay attention to be following what the market thinks is going to happen, we're still at a 71% chance of a 25 basis point decrease. So it's not guaranteed, and this is what's going to make things spicy, a little interesting, a little fun to watch. 25 basis point decrease, 71% chance. So it's not 100%. Was closer to 100%. I think it was like 90, 95% last week when we had the PPI figures that came in way higher than expected. But again, the Fed can only cut rates if the economy is starting to look shaky. Respect to Powell for not giving in to Trump, of just calling for those rate cut decreases, because remember, why did we have huge inflation 2021, 2022? Because the Fed printed so much money. And hence, bringing all this together, that is why the dollar is disgusting. The dollar is down 10% year to date, and the S&P 500 is up 10%. So that's a 20% difference. And so if you're watching this, you're watching it because you're a trader, but it's not just about trading. You got to make money with prop firms, and you have to do something with that money. Should be invested, not financial advice. But holding dollars, and I mean, I hold dollars as well, it's hurting. It's not looking so good. And so to bring it back to the main article, what did I miss? So remember, moving forward, it's all about, I mean, you're watching this, you're probably trading some dollar denominated asset. Even gold is a really good one to watch. And actually, just to throw on gold for a moment, you can see, whoops, this is Bitcoin. Gold is also at all-time highs. Why? Because the dollar is getting weaker and weaker and weaker, and it's only going to continue to do so. Hence why Bitcoin is so phenomenal, because it goes against the fiat printing machine. 21 million Bitcoin created, can't ever have any more. So it's really the antidote to all of that money printing. But remember, you have to keep an eye on what the Federal Reserve is going to do. So weak demand for dollars as global investors chase juicier returns elsewhere. We covered that. So why do markets care? Remember, tariffs, trade, global supply chains lead to a cheaper dollar. That makes US exports more competitive, but it boosts import costs, which is obviously not going to be good for Americans. Commodities, remember, you have to be following the dollar. When the US dollar weakens, watch gold, watch oil, watch Bitcoin. And equities, dollar weakness equals a tailwind for big US multinationals who earn abroad. So remember, risk on is alive and well. We're watching this. The only reason you pay attention to the news is to make more money, to make better trading decisions. Right now, we are in a clear risk on environment. That means unless you have a particular reason, don't be going short pound yen, as an example, right? You want to be in those risk on trades. Of course, it fluctuates day to day, hour to hour across timeframes, but in the big picture, if you want to make the big money, you have to align yourself with the big picture. The big picture is risk on. Okay, so keep an eye on that. Let's take a look at our daily tasty movers and shakers. What were the biggest moves yesterday? This stock Wolf, which is actually a TeraWulf, they've been in the news recently. They're a data center company and they do Bitcoin mining. And Google just invested in the company. They threw $3.2 billion into the company and it ripped yesterday 10%. Google acquired a 14% stake. So if you're interested in that, TeraWulf, definitely a stock to keep an eye on. Intel has been an interesting one. Okay, rumors are flying that Trump's administration wants to buy a 10% stake of Intel to bring chip making back home. So they want to ensure that chips, which is really the new modern day warfare, can be made in the US. Okay, so it's interesting. I mean, it's interesting for a couple of reasons. One, it's kind of, a communist stance to, to take a public company and then have the government own a stake in it. That's that is controversial. But what's also interesting is what the market thought about that. And the market didn't like it. The stock was down almost 4%, 3.6% on the news. So you would think, oh my gosh, the government is going to be buying the stock. That's going to be fantastic. No, think again. So keep an eye on Intel. That's going to be an interesting one. I actually want to take a look at what the stock has done this year. Year to date, they're up 17%. 5-year chart is pretty ugly, down 52% over the last 5 years. So that's absolutely disgusting. The stock is nasty, down 3.6 today. So we'll see. It actually pumped originally on the news last week that Trump wanted to buy a stake in the company. So interesting there. Air Canada, oh my goodness. Air Canada, we spoke about it yesterday. We've been talking about it every day. what an absolute mess. So over the weekend, they started striking 10,000 flight attendants. The government ordered them back because Canada is amazing at violating basic human rights. But good on the protesters, good on the flight attendants saying, no, we're not going back. So the company is now bleeding $60 million a day. And I think there's now 500,000 passengers that are impacted, a whole bunch of flights canceled, and the stock was down 3% today. So it looks like the only thing grounded right now is the share price. So Air Canada continues to be a joke. Canada continues to be a joke, but I'm Canadian. So, I'm actually allowed to say that. Meta is an interesting one. When I looked at the FinViz, heat map for the day, all of the indices were flat, but Meta was down big time. 2.27% is actually a big move for Meta since it's a massive stock. They're down because they are once again rebooting their AI strategy for the fourth time in 6 months. So that's a bad dip. But again, big picture, because it's all about the big picture, their Q2 revenue jumped 22% year over year, which is crazy. So investors just wish Zuckerberg would stop treating AI like a new hairstyle. If we pull up year to date, they're up 28%. I mean, imagine buying when it was, 2022, $126. It was literally a trade of a lifetime. The PE ratio is still pretty low, 27, small little dividend there. The market cap is just shy of $2 trillion. So they're still sitting pretty at all-time highs. So incredible. Lastly, Starbucks made the news. They climbed 2% after announcing that all salaried employees, corporate or in stores, will receive 2% raises. Now again, Starbucks has been not doing well whatsoever. Let's pull up the stock. They are flat for the year. Over 5 years, they're up 20%. But you can see here, they've just been sideways consolidation since basically 2019. So their sales are down big time. They're trying to turn the company around, and this is their latest effort. So Starbucks coffee, completely overrated, but that's what they're doing. Some success, some trading success, some Tuesday motivation. I told you guys that we were going to talk about prop firms. Everything I talk about here is to help you pass a prop firm challenge. I passed 700K challenges. My first one's back in 2020, 2021. Then I passed another 3 last year. I think I'm pretty dialed in when it comes to taking 100K prop firm challenges. I've been very transparent on this channel for years now, sharing my process. But again, I was nowhere close to the kind of success of this payout. So this is from a while ago. This is from 2024, but this is the largest that I'm aware of futures prop firm payout ever, $1.9 million. It is 20 times 93K payouts and 20 times 3K payouts that got approved. And this is from Apex Trade Fund. So honestly, incredible stuff there. And it's just a little bit of motivation to remind you guys of what you're working on. If you're struggling with prop firms, this channel is a great resource for you. You could drop a comment down below. Whatever it is regarding prop firms, something you're struggling with, lark funding, or anything prop firm related. I mean, the idea behind this channel is to be as transparent as possible. I think I'm one of the only prop firm owners that makes this type of video content. I've shared a lot of stats and data on this channel, on the Lark Funding channel, about what makes a successful prop firm trader. So I want to help you. So again, just drop a comment down below. I'd be happy to do that. A few other things that I want to look at for today. Investors are massively short on Ethereum. In fact, the most in history. So this went kind of viral online. Take a look at this. This is the net shorts on Ethereum. And it's at the largest in history. So that's pretty insane. I don't trade Ethereum. I don't follow Ethereum. I'm a Bitcoin guy. I believe, it's Bitcoin or nothing. But that's not to say there's not opportunities out there. So just keep an eye on this. I mean, if anything, if GameStop was a lesson for us, this might actually be bullish for Ethereum. Renting is now way more affordable than buying. So I've made a couple of controversial tweets over the years saying that, I actually think renting is better than buying. And at the time I was saying that as a renter, but now I own a house. And I still think in many ways renting is better than buying. And if you look here, in terms of the spread in price, it's just absolutely insane how expensive homes have gotten. I don't think it matters where in North America you are. It's just gotten insanely expensive. I'm in Montreal and I was renting an apartment at $2,500 a month. And that exact same apartment for sale, because it was in a big condo tower, cost $650,000 to buy. The mortgage on that alone was like $3,300 plus condo fees, plus taxes. And then on top of that, you have maintenance too. So, I mean, there's nothing wrong with renting. Don't let the boomers tell you that, you have to buy. If you can buy, great, but renting is nice. It's peace of mind. There's nothing wrong with it. And right now, the numbers are clear that it's much more affordable. Next up, is this stock way undervalued? So I came across this tweet, and I'm not going to do a deep dive here, but keep an eye on UPS. This guy said UPS is one of the most undervalued stocks in the market right now. Currently the most undervalued it's been since 2009. And with it, as the largest courier in the world, shows UPS is an easy buy. I think its English needs a little bit of work, but that's okay. It has a 7.75% dividend payout, which is insane. 7.75%. So absolutely insane. Let's see a couple of the comments here. What do you think about the payout ratio? A lot of people saying about, sustainable, which is a good point. I mean, 7% is absolutely massive. FedEx over UPS, similar growth metrics. United Health, don't get me started on United Health. We're big fans of United Health over here. Let me pull up the UPS stock. Here we are. Year to date, we're down 30%. Oh my gosh, that's crazy. Over 5 years, we're down 45%. It was looking good before, 2020, everyone was mailing everything out. Now it's down. Damn, that's crazy. So definitely something to keep an eye on. And look, you got to imagine there's tons of support around this price, between 70 and 90 bucks. There's all kinds of support. That dividend is interesting. So that stock might be totally undervalued. Keep an eye on it. Okay, let's now take a look at this. Are we on the verge of a job crisis? We're traders, so we don't want jobs anyways, but this is interesting. The 3-month average youth underemployment rate jumped to 17% in July, the highest since 2020. This metric includes unemployed individuals aged 18 to 24. It is even worse in Canada. The youth unemployment rate in Canada is the highest it has been since 2010. Total disaster. This is nearly in line with the peak during the 2001 recession and the early stages of the 2008 financial crisis. So something to keep an eye on. This is sort of behind the scenes, something that's brewing that could be a leading indicator of things potentially to come. Any funny comments here? Give it time. We're just getting started in cleaning out illegal alien workers. The kids will have jobs again. That's funny. Generational verges are real. So definitely something. Oh my gosh, what's this TikTok one? They're all making TikTok videos instead of getting jobs. Michael Saylor is the man when it comes to Bitcoin, and he has bought more Bitcoin. Absolutely insane. But this one was a little disappointing. $51.4 million, small purchase for Michael. They bought at literally the peak, $119,000, and they now hold 629,000 Bitcoin, acquired for $46 billion at $73,320. So he's got about a 25, 30-ish, probably closer to a 35-ish percentage gain on the Bitcoin that they are holding. So Michael Saylor, if you don't know him, you got to check him out. The guy is crazy. And then lastly, the price of lumber is crashing. Some good memes today. I should have sold. Feel you. Is my room still available? Yeah, mom, the alt season is canceled. Good stuff. So we read all of this news, we follow the market, we understand what the market is doing, because guys, technical analysis is not going to be enough. Yes, sometimes you can make money, of course, by just drawing some random lines on the chart, but it is not going to be enough. The pros understand why the market is moving the way that it is, and they have a thesis for where they think the market is headed. So we read all of this to help us determine where is the market going next. But we read this stuff so we can make better trading decisions, so we know how to position ourselves when it comes to taking prop firm challenges to make more money. So if you have any questions about this, drop them down below. This is a new daily series I'm doing, so we're gonna do it for the next week, maybe 2 weeks, see what the vibe is, see if you guys like it, and then I can always make more and continue from there. If you made it this far, I'll see you tomorrow. Peace.